All right, guys. So with the first trade he has here, obviously you can see his short on the pound yen, and I believe he has the next slide is going to be um, the next slide he has is going to be the dollar yen. But with the one thing here that we will typically look for is going to be this is a trade. The block he has here, notice the first block is the first gray box you see on your left hand side. That's the end of the Asian session. And what you'll notice with each of these charts, just as a preface for each of these charts coming up, the skinny and often wider box, or often taller box, is going to be the New York session. Now, one of the things that we talk about is cycles. This is one of the things we talked about in the first webinar. You notice how he has three intraday smaller pushes against the overall trend. And this is typically one thing that is a very simple thing we can look for as we come into those higher probability levels. Now, if you notice where he's taking this entry from, look at what it says there, 127.98. So that's telling you there's a psychological barrier above that point, which is 12800, or excuse me, 128 even. So typically in the daily market review, one thing that we do is we'll say, okay, this is the probable direction. There's two things I list in every daily market review: probable direction and the manipulation points we look for. Now, those manipulation points, those are points that we're looking for the market to come up, create that stop run, or create the topping formation or bottoming formation at that point. Now, if you notice, the market went through 128 on the pound yen, blew through that psychological barrier, gave the essentially what we term as reversal legs or railroad tracks back to the downside. That's giving us the indication that we're seeing that stop run through that level. That's a high probability setup. That's giving us an indication that they drove the price above 128, took out the stops, slammed the price back down. So what Chad was doing here, and Chad does a good job of this, is taking entry, because you're often going to get the market to come back into that level. And that's what forms that, in this case, is a topping formation. You can call it whatever you want: topping formation, M or W, 1, 2, 3, ABC, whatever you want to term it. The principle is the same. In this case, we saw the stop run of the 128 level. The market retests that point, which forms that topping formation. That's where Chad often takes the entry. Chad does a little bit more aggressive entries than I often do. Oftentimes, I'll wait for a second candle rejection. What Chad will often do is, after he sees the stop run, notice where that arrow points to, where it's showing his entry. He's taking it as it's coming back into that high, because he's trusting the fact that we've seen 3 intraday cycles up. It's against the overall push, and that stop run through 128. Now, it's also important to note that the time of day he took this trade. If he took, this trade was taken during the typical manipulation time that we often see. We see it, high probability times are often between 1:30 a.m. and 5 a.m. at the most. Generally, that tends to be the time, and 8 to 11. When we're looking for trades, we're looking for trades that happen during that time. So, Chad, if there's anything else you wanted me to cover about that trade, that was a nice trade. One of the key points you can take away from this, and maybe I'll try and solidify a key point to take away from this: look for major psychological barrier, or look for and then I'll write this in at the end of the room, and actually, Chad, you can write in this as well. But one of the things that we'll often look for is we'll put points of confluence together. And what I mean by that, a point of confluence is an area that has multiple reasons to see the market create a stop run at that point. And what we'll look for is levels based on what generally retail traders are going to do. So what do all retail traders do religiously? Our orders, now, is it going to be every one of them? No. There's never going to be 100% for anything. But with that being said, a psychological barrier, there's a reason why the price frequently drives through. And when I say a psychological barrier, I mean on the pound dollar, one spot 5600, one spot 56 or 5,700, 5,800, those round numbers. So when we're seeing those at those high probability manipulation points, and we're seeing 3 intraday cycles against the overall cycle, that's giving us a strong indication that, okay, they've driven the price up, they've created the manipulation, they've driven the price through that high probability point, induced further buying pressure, sold into the buying pressure, and began to drive the market down. And notice Chad has that 90 pip tool on here. That 90 pip tool is often, once you've identified the manipulation of smart money, they're generally going to tend to drive the price at least 90 pips. Why is that? Yes, it is Eastern time. So why is that? Well, if they've taken hours to accumulate a position, if they've driven the market up and taken an hour, 2 hours, 3 hours to accumulate a position or to manipulate the market, how long is it going to take them to exit that position? They're very simply not going to be able to do it within 20, 30, 40 pips. And that's really the whole principle behind the first part of our article series, is the risk reward. And that's what makes the smart money setups so profitable, because over the long runs, you're taking trades not looking for 20 pips, not looking for 30 pips, looking for bare minimum 2 to 1 on your positions, as a goal at the outset, looking for 2 to 1, because it takes them time to exit those positions, and thus takes them moving the market more than 30, 40, 50 pips. Yes, well, it's Chad does it with an Andrews pitchfork. You can do it whatever way you want. I don't mark it with anything. I just draw it and know where 90 pips is, and put a horizontal line there based on where I'm starting my entry from. But yes, the middle line is 45 pips. All right, Chad, do you want to move on to the next slide here, buddy? And if you can have an advance, Chad, if you can have any pre-thought for the next slide you're going to go to, and PM me that way, I can have a little bit of a advanced knowledge. I mean, I generally mostly these trades I'm going to recognize, but here's another good example. This was the dollar yen. The point I believe he's trying to convey here is he looks for confluence when taking any of the yen crosses. He looks for confluence, and so at this same point, the dollar yen was giving that topping formation at exactly the same time as the dollar yen. Yes, this is a 15-minute chart. Oh, you're telling me, okay. And he was looking for that point of confluence on the dollar yen. And I believe that's the message he was trying to convey here. And that's an important point. We talk about that a lot in the daily market review. We talk about what type of confluence do we have between the euro and the pound at that same point. That's what gives us more confidence in the overall cycle that we're in. So, all right, Chad, you want to scroll on, unless there was another point from this one, but I think that was the one point from this. All right, this was another trade. One thing that if you'll notice, we talk a lot about times again. The big box is the marking of the Asian session. So his box is coming to an end at 1:30 a.m. Eastern. Correct me if I'm off by 30 minutes on that, Chad. I have my box adjusted a little bit different. It's more of a preference than anything else, as long as you're within that range. But we're always looking for the 3 cycles. We're always judging the 3 cycles on a weekly basis, meaning over the course of 3 or 4 days. But we're also looking for intraday 3 cycle pushes, and this is going to be something that, as somebody comes to a better understanding of what what they're looking for, one of the things they begin to understand is, in this case, the overall direction was to the upside. And so for somebody that's new to the market, we would say look for trades only to the upside. Well, why would Chad take a short here from 129.61? Why would he take that? Why would he take that short? Well, if the overall trend is to the upside, what do we almost always see at the beginning of the London session? If they want to drive the market up, what are they going to do? If they want to drive the market up, they're going to induce selling first and then buy into that selling pressure. And so when he saw 3 cycles to the upside, then the topping formation, what gave him the confidence to sell that was the fact that even though he knew the market was ultimately going to more than likely had a probability of going to the upside, they were going to make that fake out first. And this is where you get into your other types of trades, your trades that are against the overall cycle. I caution people to have a really solidify taking trades in the direction of the weekly cycle before they get into a little bit more aggressive trades. But this illustrates the point of why that trade was taken. It shows, when you see 3 intraday cycles within the Asian time frame, which is typically an accumulation period, frequently you'll see that move retraced. And so that's, again, another reason. And again, 3 intraday cycles and then a topping formation. At the very least, he was expecting some type of fake out, as you almost always see at the beginning of the London session, the European session. All right, Chad, you want to move on to the next one here? This trade, he, as you can see, held for 2-to-1. The reason he took that, and Chad is notorious for holding the trade longer than, he often holds trades much longer than myself. And the reason for that is that's his type of personality. This trade, being counter trend, was held for 2-to-1 because it was, again, a counter trend trade, a counter smart money trend trade. As we move along, guys, if you have questions, feel free to shoot as we move along here. All right, yeah, 15-minute. You can see at the bottom. All these charts are going to be on the 15-minute. They should be. So this is another example of a trade here. Notice the entry was. And we'll kind of, if you can illustrate this with your mouse, Chad, he was expecting the market to be holding on the previous high, expecting that larger topping formation, and that would be what would be holding the euro. So in this situation, as he saw 3 separate pushes, the market made a first push up, it stalled for 1 candle, it made a second push up, stalled for another candle, made a third push up. He was taking it as it was coming into the highs. Why was he taking it? Well, it's a little bit riskier of a trade, but he was taking it because it was creating that larger topping formation, in addition to the fact that, look at the time of day you're coming into. We look for the New York session to typically give signs of reversal towards that 11 o'clock time, and that's why I say that your viable options for a trade are between 10 and 11 o'clock. So the closer you come to 11 o'clock, the closer you're coming to a probable reversal. So as it came into that time, it was completing a larger topping formation. It was giving 3 intraday cycles up, so the move he was believing was more than likely over, which in fact it was over. Just never really gave a proper risk reward to take the trade. One thing you'll notice here, guys, is that there was a trade at the lows that was missed. Unfortunately, this was, you're not going to catch every trade, but if you'll notice, there's always this 3-cycle pattern. We're showing a lot of intraday stuff right now because it's been something that we haven't covered a lot for the members that are on the free list. And if you notice, before this move during the London session, what ended that London session push? We saw a first push down. During the London session, we saw a second push to the downside, and the market stalled for 3 candles, and then you ultimately saw that third push to the downside. Well, the thing with Elliott Wave is there's a major series behind Elliott Wave, and there's a lot of principles and rules found within that. But the one thing that really separates us, or separates our belief on the 1, 2, 3 cycle, is the fact that, and we very clearly we'll say this, and I guess, let's see, what's the best way to say it. The 3-cycle pattern is not something that smart money looks at the market and says, okay, we've made a first push and we made a second push, we have to make a third push. We discuss probabilities, and we talk about this in the reviews quite a bit. Smart money tends to drive the price in patterns of 3. Now, this has been around long before any of us were alive. It's the way the market tends to cycle. It's never 100% pattern, but it is the way the market tends to cycle. Okay, so moving on with that, it's something that within the 1 2 3 pattern, the key that we look for is how smart money tends to cycle the price. So, and I don't want to get sidetracked into this, but just to kind of overview it, we tend to look for 90 cycle or 90 pip moves. That if that move hasn't created a 90 pip push, then we're not considering it to be the first push, second push, or the third push. And so there's different things we look for. Also, the fact of the time of that cycle. Was the cycle created over the course of a few days? Was it created over the course of a day, or was it created over the course of 2 days? Anyways, getting into this trade, we'll get into the pound and walk through this original or this entry here on the pound. Now, again, notice the market. Hang on one sec. I just got a message from Chad here. It's kind of a pain in the butt trying to convey two different opinions at the same time. All right, same thing here, and we'll walk through. Chad, if you can bring your mic up here, or your mouse, excuse me. Notice the start of the move. Notice how at the beginning of. Okay, give me one second, Alvin. Notice at the beginning of the beginning of the move down. At the start of London, you have the market breaking through the Asian session highs. Very typical. That's giving you at least some indication that they're doing what? They're inducing buying. They're taking anybody out as far as the stops that are above the Asian session highs, as well as inducing any other buying that's above the Asian session highs. Above those Asian session highs, the stops are taken out. The market's immediately pulled off that point, and what happens? It comes back up, creates that topping formation. Correct me if I'm wrong, Chad, but I think this is a trade you were taking in the room. I'm not 100% sure, but this one looks familiar as to what you're taking in the room. But it comes back up, and that's one of the things, one of the keys you can look for moving forward as you're looking through the London session is if you see them take out the stops originally, the market is almost always going to retest where they took out those stops. And so that's a key point looking forward as you're trading the London session, and you'll see this with any other session. That's why you get the topping formation or bottoming formation, which is an M or W, whatever it may be. But after they took out the stops, that's telling you they were inducing buying and then selling into the buying pressure. If you don't understand the stop run, make sure you look at that video. That video is on, you can find it on the site or on YouTube. Just look for the stop run reversal. But the principle of them taking out Asian session highs or lows is an extremely common thing. So once they've already done that, they're telling you that they've induced buying and sold into that buying pressure. So as the market comes back up for the retest, that's what's giving you your viable reason for an entry. Now, Chad had the stop move down to plus 20 on this one, and with the stop being moved up, the trade was taken out for plus 20 on this, and that was, he was not expecting that deep of a reversal, but with that large of a move and coming into that time of the day, he was protecting a bit of profit, ended up getting closed out for plus 20 on that position. All right, Chad, on to the next one. Actually, let me get to that question here. Let me scroll up just a bit. Alvin, do you have to look at large time frame? In the daily market review that we do, we always address the 1 hour weekly cycle. And as I always say in the review, there's two questions we're going to ask ourselves every day. One is, what's the likely direction of the market for that day? And so we discuss what direction we're looking for based on the overall cycle that we're in. And the second question becomes, if we know direction, then where are they going to start that push from? And that's when we identify those high probability manipulation points. So yes, we always start with the higher time frame. I go to an hourly. I use the hourly and the 15-minute for addressing the hourlies for addressing the overall cycle, and the 15 minutes for addressing the probable entry point. Exits are something that are personal, and Chad does things a little bit differently than I would, and I never say that what I do is right and what somebody else does is wrong. Um, and I don't say that about what I do. I don't say that what I do is right or wrong. I say it's a personal preference, and exits are a personal preference. Now, Chad, because of the weekly cycle, Chad believed that there was more to the downside, and he believed the risk of holding this trade was outweighed by the reward, and that's really what it boils down to, as simple as that. Most of these trades are live trades that were either in the room or there's a recent trade behind it, or they're from his track record. So they are live trades. I'm not sure anything in the moment right now. 9:45 is not even a time that I do look at the market. So, and the reason for that is it's just a very low probability time. It's a time where you don't have um, you typically don't have any setups that are a viable option uh, during the Asian session. Okay. Yeah, Joe, and that's the completion of the intraday move was over, and I remember talking to Chad at this time, and he's saying, yeah, that move's over. But if you go back and you look at this, you'll see that the weekly cycle was not over, and so what he was looking to do is, I'm not sure whether it was the second or the third push, but he was looking to catch the next push, um, the following day, or that following 24-hour period. Just didn't happen on that one. Didn't have quite enough leeway. Also, hang on one sec, Chad. Don't move on just yet. Uh, One of the things that I want to point out, that trade was from the ECB press conference. So the reason you saw that big of a spike back up where his entry was because of the news. And there's an article on the site, and I believe a video that covers how the price is manipulated in and around news. They will complete a stop run in and around news, and they will oftentimes complete the third push with that news release. I never trade the London session. I'm only trading the New York session. So these trades, because Chad is based in the Philippines, his trades are all based on the London session, or the majority of them, I will say. Sorry about that, guys. Uh, how often does the New York reversal occur? What I was saying is I was muted. I'll repeat that again. The What we're going to look for a New York reversal is, what has London shown us? Has it shown us 3 cycles completing that day's push? If so, then the probability for a reversal becomes much more likely. And also, what level are we at? Did we end in a stop run at the end of that move? Did we end in a bottoming formation at a point of confluence? Meaning, was it a previous support or resistance level, daily pivot, average daily range, 200 EMA, psychological barrier? Are we seeing, if all those points are coming together and we're seeing a stop run or a bottoming or topping formation at that point, at the end of a 3 day, or at the end of a 3 cycle push, then the probability of that reversal becomes much higher. So there's other things to take into consideration to just say, hey, that we're gonna see it or we're not gonna see it. There's other things that we look for. All right, Chad, do you wanna move on to the next one here? Well, there's a couple rules for determining overall cycle versus your intraday cycle. Your intraday cycle is going to be based on a 24-hour time frame. So you're looking for 3 intraday cycles within that 24-hour range. As far as the overall cycle is concerned, it's typically forming over the course of 3 to 4 days. Each of those moves are going to be separated by 90 pips. And when you see that happening, you start looking at the correlation. Is the pound and the euro, are they both making the same move? That makes it much easier to identify the overall cycle. So number one, we start with the overall cycle. We start with that weekly cycle. What level are we in with the weekly cycle? Once we identify where we're at in the weekly cycle, then from that point, we can begin to look at those smaller cycles. There is the first, I believe it was the first and the second training session cover that. The second one, I did a few different points to it, but um, the first one was definitely the first one covered the cycle, and it answered a lot of questions on that. And there's also a 3-part video series that covers cycle. Chad's restarting his screen share, by the way. Hopefully that makes sense, MM. But as a baseline rule, that 90 pips is going to give you a very good baseline rule, because if it's not moving 90 pips, or if it's 87 pips, I mean, we got to be there's no exact rule there, but right there at the range of 90 pips is going to be a strong indicator of, okay, they've driven the price enough to where that move has a probability of being complete, or a strong probability of being complete. This is a good example of of the weekly push, and how we're separating a weekly push. Now each of the horizontal line that you see is going to be the separation of a day. This is an hourly chart of the euro yen, so look at the overall perspective here. And to begin, and this is one thing that once somebody tells you, you'll go back in your charts and you'll see it on a smaller time frame, you'll see it on a larger time frame. Almost all moves come from accumulation. So you notice Chad has that back and forth sideways price action right at the top, marked in a box. And the reason he has that marked is because that period is giving you an indication that a position is being accumulated. Sideways price action almost always marks the start of intraday pushes, and almost always marks the start of a weekly push as well. All right, you're gonna let me know what chart you want me to break it down on this one here, Chad. Well, the overall cycle here is pretty clear, because, and this is how we're going to identify again the weekly cycle, is notice how the first push occurs within that 24-hour period, the second push occurs within that 24-hour period, and the third push occurs within, again, that 24-hour period. It's separated over the course of 3 days. If you go back and you measure each one of those cycles from high to low, those cycles are going to measure 90 pips. So that's a good way and a good indication that the time factors ruling out, what was a push and what wasn't. The pip count, as far as being at least 90 pips, is going to give you the indication of again, the pip count is giving you the indication of as well, was that a failed push, or was that a true push? Okay, so he's get into the overall trade. If you want to move to that next slide, Chad. The 90 pips is a baseline, and so you're going to consistently see moves that are 110, 120, 130, but we want to use a baseline that is frequently hit, and that baseline is a good enough move to where it's giving us enough of an indication that, okay, this is typically how far they're going to move the price. That volatility is going to change, whether it's a 90 pip rule, or you're going to typically see 120 pips be a baseline. For anybody that was around 4 or 5 years ago, it was very frequently you'd see 300 pip days on the pound. So that 90 pip rule changes with the increase or decrease in volatility of the market. Oh, of the current chart. Yeah, we can. Well, what I'm running from, it's not going to be off. I'm gonna have Chad broadcast it. I didn't plan on running this, so I'm not running from my home computer. I'm actually running it off a laptop. Well, I appreciate it, Jim. Yeah, unfortunately, it's not the best of circumstances, but doing the best we can with. I didn't want to reschedule just because, first of all, I hate sending out multiple emails. If it's not a valuable email, I hate sending it out, just because I don't like junk emails anyway. So, okay, another good example here, guys, and we're hitting the same points for emphasis, because it takes seeing. You're going to see the same thing. It's going to visually look slightly different. But if we begin to understand, okay, we're looking for 3 cycles. Oftentimes 3 cycles outside of Asia. as if you're looking in consideration of what we're looking at right here. And again, we look for those 3 intraday cycles against, and one thing you'll notice is that the biggest thing we're going to look for is high probability manipulation points. That red line on here is a resistance point. You go back, if you're looking at the euro pound, the red line being a clear resistance point. You're also coming into the 200 EMA. What time of day are we in? Well, we're outside of the Asian bloc, getting into the beginning of the European and the London market. So that's the time frame we're looking for the manipulation. Within that time frame, we're seeing the market come into a point of confluence, which is seeing it coming to the 200 EMA as well as a previous resistance point. Seeing the market breaking through that point, giving a smaller stop run, and also you'll notice that it's actually essentially a M topping formation as well. So it's what I term as a stop run topping formation. At the close of, or at the second retest, is where Chad was taking the entry. 80.41 was the entry point, and with the with entries like this, one of the things that generally we're able to do is we're able to take very tight stops on those entries. I generally set a 20 pip entry or 20 pip stop just to begin, but that's a safety stop I'll immediately put in the market, but it allows for that much better risk reward as we've any profitable trader I know is always profitable because of the risk reward. Not to say they don't have a better than 50-50 win-loss, because some of them do, but I also know one of the better traders I know, one of the better swing traders I know. I'm not a swing trader, but he runs about a 40% win-loss ratio. But his risk reward is almost always 4-to-1 or better. So we've seen a lot of these charts of the same thing. Asia comes to a close. We're seeing 3 cycles, sometimes a clear, maybe a clear cycle, but sometimes the first push and the second push and the third push are separated by one candle that kind of stalls out. So you notice that what we have in common is it's the time of day is the first, one of the things that's a big thing in common with these trades. They come into a point of confluence where retail traders are going to be stacking their orders. So psychological barriers. The 200 EMA. A 200 EMA is the 200 moving average. The SMA and the EMA are very well used EMAs. So when you see the market push through those levels, close above them, get rejected, form a topping formation right at those points, what's happening in and around those levels? If you're in the overall direction, let's assume the overall direction is to the downside. So when you see the market out of the Asian session begin to start to push up against the overall cycle, it comes into a high probability manipulation point, gives you a stop run, or in this case a stop run topping formation. It's a high probability entry. So we're starting out by understanding the overall cycle that we're in. We're second, moving to the time of day. We're third, going to a high probability manipulation point. Well, I'm sure there's members on here. I don't know, any members that are current members that want to speak up. If you can give a little bit of your experience, I'd appreciate it. I know everybody is, everybody's at different stages. But one of the things, and I can't speak for everybody, but when you hear it, when I try and put everything into a 1-hour session or 1-hour seminar, it's really not possible, and everybody understands that. The one thing that the reason we offer our membership is a lifetime membership is because it takes time for somebody to learn. We don't want somebody to feel stressed with, okay, I have a monthly payment now and in a month and a month. And it's also the main reason why we have daily reinforcement. We understand it takes seeing this every day. And I think it's also important with the daily market reviews. One thing that we're very clear on is, okay, I believe the market's going up today based on this. This is the cycle we're in, and these are the exact points I'm looking to take along. So the fact that we give the forward-looking aspect of it really helps traders progress. But for somebody to become proficient at it, we've seen kind of all spectrums. I see traders that take a couple months to really have that aha type moment we talk about in the course. And I see other traders, in fact, we just had an email a couple weeks ago, a trader that went through the course and um, sent us his track record for the week after he went through the course, and he did very well. He maintained about a 67% win loss, and he was over 2 to 1 on his risk reward. And I don't think last week was one of the easier. It was either last week or the week before was one of the easier weeks to trade. So everybody's going to be different, and it does take time. But that's I think one of the more important things that everybody recognizes, there is no get rich quick scheme in this market. There's no easy way to trade the market. The one thing we need to understand is there's many strategies out there, but there's only one group that moves the Forex market, and that's the banks. And so what we do boils down to something very simple. The banks move the market. So why would we ever try to apply rules to a market that we don't control? The whole philosophy is identifying the fact that they need supply to meet their demand. Because they need that supply, they always leave a footprint. Is that footprint trackable every single time? No. But when it is, it's often very clear. And because they're so large, they have to create that supply. By them creating that supply, it leaves us the trail to follow. And that's really the basis for that. Now, how long it takes somebody to really have a complete understanding, it will vary, but it doesn't happen overnight. And I'm the first one to say that. Yeah, I'm recording it. It's gonna take a bit to edit it though. In my opinion, there's really no other way to do it, because if you think about it, guys, every strategy you've ever used currently or used in the past, it relies in some way, shape, or form on the market going up to eventually trigger a long. Whether it's the candle starting to come down and work back up to eventually trigger the long, or maybe it's the moving average or the EA, it takes the market moving up to eventually trigger the long. You think about it, how does smart money short the market? They induce buying and then sell into the buying pressure. That's why I get email after email of traders saying I entered exactly the wrong time. It's because the market has to go up for smart money to sell, and on the retail side, the market has to go up to begin triggering retail strategies, whatever strategy that may be. A market starting to work to the upside is what it takes to trigger a long on the retail side. And it's exactly the opposite from smart money's perspective. As the market begins to work up, they're selling into that buying pressure. In the room, it's live charts. Everything we do in the room is live. You got to remember, guys. I ran a live room where all I did was call trades for 3 years before we got into the current format. One of the things we learned is that people don't learn successfully in a live room, and it sounds kind of strange. Excuse me. I guess I won't say in a live room. Period. I'll say when the live room is the only source of learning, and that's because they become reliant on Chad and myself. But traders that with the current format we have, we've seen a lot more success, just because I think it forces traders to become proficient on their own, of their own doing. We give them all the tools they need, and we give them the daily reinforcement and the daily hand holding with the market review. Now there's a member chat where members are able to chat with each other, the Forex forum, the live training rooms. But at the end of the day, although we do call trades live in the room when they present themselves, that's not the purpose of the room. So when we don't call a trade, it takes, traders have to apply it for themselves. And I think that's really why we've seen so much more success with the new model. Thanks, Terry. I know you've been around for a little while. Yeah, that's definitely true. A lot of info to cover in a short period of time. Sterling. Thanks, Terry. Appreciate it. The thing, Joe, with the live room is that we don't have a way. I mean, we give a link to the room, and then we have to change the password for all the members. And really, the live room doesn't make a whole lot of sense unless somebody has the basis of the course and then has been through the reviews. In fact, one thing we recommend when somebody does sign up, we always tell them to go through the course first, then look at the daily market reviews, and then come into the room, because you don't want to get overwhelmed with information that's not going to make sense to you. And we have a lot of members that just simply remember the link and then type in the password. So again, when we allow somebody in, we have to change the password for everybody else, and I get a couple hundred members yelling at me for changing the password. So hopefully you understand. I'm sorry, it's just kind of a pain in the butt. It's not really a pain for me, it's just a pain for everybody else, and then I have to answer everybody else's emails. And we already get quite a few emails. So see, and that's, I think that's really a lot of what keeps Chad and I doing what we're doing. I mean, one thing I discussed with Chad last week, and we've had many emails of people saying, why did you raise the price? Why did you raise the price? Well, we raised the price because we can't keep up with the way it was at 329. As I told Chad, we probably made or had double the signups at 329. But if we can't provide the product that we say we're going to deliver, then what purpose is it now? It's 379. And the reason the price, eventually will continue to move up is because if you can't provide the product, then we're just like everybody else. And the reason our service is what it is because there is nobody that offers better support. And I'm comfortable saying that. I think any member in here would completely agree with that. But that entails not having 50 people signing up all in one day. And so unfortunately we have to kind of raise the price to slow it down, and we do make less at that price and have less signups, but the service isn't going to suffer. And I think any of our members will say that there's no better support out there. I think I think I'm safe to say that. Thanks, Mike. I appreciate it. I'm glad we help. Martin's a good guy. He's got a lot of good info, and he's definitely very knowledgeable as well, though. Yeah, I'll get to that here later, Krim. Actually, as I was piling through the other emails, I noticed I missed your email. The secret is I get Chad to do all the work, Mike. Now in general, it doesn't take a whole lot of. I mean, it doesn't take a whole lot of time. It just takes being there. It takes being able to do the review. It takes being there to answer the questions posted in the forum, and hopefully the quality of the service never goes down. So, all right, I'm just answering questions now, guys. The slides are over, so I'm going to run through the questions. We're getting them here. For anybody that's been on and has to leave, I apologize for the sound not coming across clearly. I wish Chad could have explained it himself, but that's not what happened, and hopefully the message and a lot of the principles were conveyed, and hopefully you can take away some of it in your own trading and it benefit you. We're going to try and get this recording out so you guys can go through it again, and I again hope it benefits you. If you have any questions, you're always free to shoot us an email, whether you're a member or not. All right, one free setting for you, Daniel. In the daily market review, the cycle is always clear. In what I say, I always mention that this is the first cycle, or we're in the second push. So I always clarify what cycle we're in. I believe you remember. If you remember, you can see what cycle we're in because I post that in the review. As far as an indicator being made, there's no way to 100% quantify with with numbers. And this is the reason all EAs fail, and all in my history of 7-8 years of trading, why every single EA and software based strategy always fails long term because there's no way to exactly quantify the market in a 100% mathematical way. And so we need to understand the basis of how smart money moves the price and be able to interpret that, which is much more easily done once we understand how they do it, and then understanding what push they're in manually. Is there a pair that you do not use this strategy on? I do not trade the dollar CAD. I hate the CAD. It's called the loonie for a reason. And the CAD yen's all right, but if you're gonna trade the CAD yen, why not trade the euro yen, which is my favorite pair or favorite yen cross? I don't like trending pairs such as the Aussie and the New Zealand. I generally don't trade them. I generally stick to the euro and the pound. Those are my two pairs. Some of that is preference, and some of that is based on the fact that there's a lot of other outside influences on the Aussie and on the New Zealand. It's a commodity-based pair, so you have risk aversion, risk appetite really taking hold on the Aussie, and sometimes it's not quite all that clear. Same thing with the CAD, based a lot in oil, so you have other things pulling on it. So trading the smart money, manipulation, you can trade that with any pair, but trying to identify what cycle you're in tends to be a bit more difficult on those pairs. Yeah, that was awesome. I got an email from somebody. I'm not sure whether it was you or somebody else, but somebody did. That was you, Karim. Great job on that. That's always nice. That reminds me of Daniels. I don't think he's in the room. Daniels' 400 pip day a month ago. He caught a couple pairs and did quite well. Was looking for that third push and ended up getting it. The earlier slide, I think it was the euro yen. Chad had marked the pushes 1, 2, 3. Just had 1. What happens to 2 and 3? Well, with what he was illustrating there was that was a false push up. Now, for me to get into a false push, those are things we'll see from time to time. For example, if you're looking at the euro dollar, and you look at, and I can't share a screen, so it kind of makes it a pain in the butt. But we had what looked like. Where's a good illustration of that? Essentially, what I'm getting at is the fact that was the start of that was a failed first push, and that's the reason why he took the trade. I don't want to, and that's why I moved on from that, because I don't want to get into explaining a false push. There's just, we can only cover so much, guys, and so it's kind of hard to get into the more something that requires a little bit more to that. I am a student of Steve Morrow, and he does not have a live trading room. Can I have a peep at live trading room? Well, the thing there, guys, is that, and I mentioned, I answered this question a few minutes ago. If we change the password, if we allow one person to look at the training room, we have to change the password for all the members. And our chat, Sterling, wow, I'm losing it here. Chad and I's first priority is the members, and I don't mean that to be rude, but we have to change it for everybody else that's already a paying member after the person comes in the room. And I hope you understand, I really don't mean that to be rude, but it just makes it, because then we'll get 20, 30 emails of people saying, will you change the password? What's the password? And we got to answer them, and it's just a bit of a hassle. There's 2 high probability times, Andrew. It's from 1:30 to 5 a.m. roughly, and the time I trade, 8 a.m. to 11 a.m. I don't trade outside of that because it's not necessary. If you're not getting a trade during that time, there's no need to take the trade. There's actually a video I did on the site that's called something, can you trade Forex part-time, or learning to trade Forex part-time. And one of the things I talk about is once you've understood the weekly cycle that you're in, you can often trade the London session whether you're going to be there or you're not going to be there. And I illustrate that with, actually, I believe I posted a daily market review where we were calling the direction the following day as well as the entry point the following day. While you're not able to do that every day, even if you're able to do that once or twice a week, it offers a very good opportunity. So there's a lot of options for trading it part-time. Whether you're able to just hit London or just hit New York or trade pendings outside of London, there's a lot of variables you can to trade part time. Good things about Steve, and that's what I'll say on the subject. I've heard good things about him. We have many members that, probably I'd say at least 50 or so members that are members, and they've, every member that says they're a member of bull says they enjoy the both sides of it. So to each their own as far as that's concerned. But I've heard good things about him. Never really heard him badmouth too much. If you have a live recording of a live session, Mike, I'm sure in the recent, I know there's live trades recorded on the site. The big thing there, Mike, is that the room is for training it and for illustrating what we're looking at in the moment. So we're going to be breaking down why we think we're in this cycle of the market, or what manipulation points we're looking for. Why are we looking at those points? Or this person has a question on tracking out levels and identifying those high probability manipulation points, or this person has a problem with identifying intraday trends. So the room just allows me to talk with members and to answer questions more thoroughly. So the room varies on a day-to-day basis. Sometimes it's a purely a question and answer. Other times we're in a trade and managing a trade. So and sometimes it's a combination of both. I may not have anything on the free side for a false push. Bill, the issue there is it's not an issue for me to change the password. In fact, it takes me about 2 minutes. But one thing is that in the back end of our site, in the members forum, there's a link and there's a password. And a lot of members have that link as bookmarked. So they click that link to log into the room on Tuesdays and Thursdays, and then they enter the password they've entered since they've been a member. And so they don't even log into the site to go to the room. And it's not a problem with me. I would gladly do it. It's just that we'd literally get 20 or 30 or more people that would send us an email saying they can't get into the room. So I hope you understand. It's really not an issue for us. It's just that I'm going to deal with that for the members. And the room, in all actuality, the room is a very small part of learning the strategy. It's more the application. If somebody doesn't have a good understanding of the basics, the room doesn't serve as much of a purpose. You gotta have the foundation. The course is the foundation, and what you read on the site's foundation. That's foundation information. The whole purpose of what we offer is the application. The application, you guys I'm sure have understood that nobody learns to trade from a course. They learn to trade from somebody showing them day in, day out how to do it. And I think that's what the daily market reviews do. They show you in real time what's happening, and I essentially predict what I believe is going to happen the next day based on how smart money tends to drive the price. Okay. Can't do that in Omnovia, Russ. I could set up another. Well, no, I couldn't because I'd have to run them both at the same time. They are from Tuesday and Thursday, from 3 to 5, or 3 to 4 a.m. Eastern. The room usually runs 30 minutes to an hour longer than we have posted. And then it runs on Tuesdays and Thursdays from 9 a.m. to 10 a.m. Again, usually runs till at least 10:30. I don't trade the minute chart, Krim. Well, you already know that, I guess. Thanks, Mike. Appreciate it. Glad you like it. Odin, glad you like it. Glad you remember. Okay. You say watch out. Thanks, Leo. Appreciate it. Okay. I don't appreciate you calling Chad's room the best room. What about me, buddy? What about me? No, I'm glad you like it. Okay, what hours? Edwin, hopefully you heard me. Tuesdays and Thursdays, 3 to 4:30 a.m. Eastern, and Tuesdays and Thursdays, 9 to 10:30 a.m. Eastern. And I'll run. The thing is, I don't stop the room at a time. I stop the room when everybody's questions are answered. Chad doesn't stop the room at a specific time. He stops the room when every single person's question is done. Is done getting answered. If everybody has everything they want to ask for that day out of the way, then we stop the room. We don't stop because we feel like stopping the room. Okay. After you join, find out how much you learn. I'm sure you'll think it's worth it. Thanks, Joey. Appreciate it. Thanks, Ty. Appreciate it. Corey, I used to trade London. It is too much for somebody that's based in the States. In my opinion, it's unsustainable. So yes, 8 to 11 is one thing you'll find out is that when you start trading based on what smart money does and you get the risk reward, you'll learn that you don't have to take 10 trades a day to be profitable. You'll learn that you may only need 1 or 2 trades in a week to be very profitable. Now you should be taking more than that, but I'm just saying, from the very left side of things, okay, we don't have to take so many trades, and so that's what allows us to just select a certain portion of time because those are the high probability times. Outside of that, it becomes more of a crapshoot. Forex, that's funny. Right, Sterling, no idea what my password is. What do you mean, Michael? Did you sign up and you didn't get your password? I'm not sure what you mean, Bill. We don't give out the password for the room, and hopefully what I've said makes sense. But I think what members say about the room speaks for itself. I think anybody that knows me, if there's a reason why I'm not bad mouthed around the web, and the reason why Chad's not bad mouthed, and that's because we get on here, we answer any question anybody asks. We don't give a half-assed answer. We answer it the same as we would a member, and we give away the majority of what we do for free. When somebody buys our membership, they're buying access to us. They're not really buying the information. A lot of the information's out there. They're buying the information condensed, and they're buying me doing a daily market review every day. They're buying the live training room. They're buying lifetime support. And once somebody becomes a member, they realize that that's the most important thing. But aside from that, whether somebody's a member or not, hopefully everybody in this room understands that nobody in this Forex market gives away as much information as Chad and I do for free. And the reason we do that is because we actually care. I mean, we help people. We answer more emails from non-members than we do members, and that's because on the member side, most of your questions are answered through one of the other avenues. And we do that because we do care. We spend a lot of time answering emails for people that have never given us money because we see it help them, and that's a positive thing. Hopefully they'll move on down the road and help somebody else in the same fashion. Keith, I appreciate it. Leo, glad you like it. Yeah, the daily market review, all the members say that's probably no. Elvin, it's $3.79 for a lifetime. Yeah, Chad's commentary does a great job of the commentary. For anybody that's not a member, make sure you're checking out his commentary. It's free. He does it every day, and Chad puts a lot of work into that, and he does that, again for the free side because it is beneficial. Odin, Leo, really appreciate it. Link with the discount. I don't know. Private message Chad. If you can get Chad to break, then we'll send out a discount link. Okay, so the false push is covered if yeah, the false, it just takes, it's hard for us to cover everything in an hour, and so the false push is thoroughly covered. Okay. Ty, that's funny. That's all right, Kay. I'm glad you hit Chad's room. Sorry, I'm trying to scroll as fast as I can through these questions, guys. That's Cornell. You're spot on. The trading rooms serve you at the best if you make part and contribute. If you make part and contribute to it, what you're essentially probably saying is you understand what you're doing and contribute to the fact of, hey, this is what I'm looking at. These are my questions. You know, whatever it is, whether it's questions, you're a new trader and you have questions, or whether you're more experienced and you have you can help people. That's what benefits really the purpose of the room. And it's James is 379, not 397. Learn more about the reality of the market since becoming a member. James, that's really glad to hear that, man. Generally, I maintain around a 65% win loss, and that's, you know, that's nothing exceptional. But if you're running a 2-to-1 or 3-to-1 on your risk reward, you can do very well with a, 50. You saw Chad's track record at 50-50. And the reason we put that section up, because that was lower than he tends to average on a win loss, and we wanted to really illustrate the point that it's never win loss that determines profitability. It's always risk reward, and that's one of the keys with smart money strategy, is that the risk reward is built into the trades. If you're taking the correct trade, the risk reward is already built into that trade. It depends, Ty. How important is the high or low of the Asian box? Well, the how important that is really dependent on whether that's a point of confluence or not, or if it's a very clear support or resistance point. If we saw a stop run at that point, then it becomes important to me. Or if that's a psychological barrier, or if it's a already proven support or resistance, or if the 200 EMA is coming in at that point. So if it's a point of confluence, it becomes a lot more important to me, the Asian high or low. And if I'm seeing the stop run at that point, then it becomes more important to me. It's just a level until I see smart money manipulate in around that point. Forex, you're cracking me up, buddy. And it's 379 again, not 397. Mike McBride, I appreciate it. Danny, glad to hear it. Glad we're helping. Xavier, that I really appreciate that. We get a lot of people that ask the comparison between us and them, and again, I have nothing bad to say about Steve, but I'm glad you feel that it serves you very well. So I think that the reason I'm glad to hear that is I think it answers the question for a lot of other people as well. Leo, no, I'm not a prophet, but you can call me that if you like. My wife just yelled at me when I said that. Okay, once you've watched all the forces, will make sense. Yeah, it does. It tends to be what we find. All right, Mike. We'll see you in the room, buddy. Have a good one. Are you talking to me, Eric? Or are you talking to Cornell? It's already worth it. price. Chad's joke. I don't want to hear Chad's voice ever, so. Alright. Alright guys, if we have any questions, feel free and shoot. I'm pretty well covered what we wanted to cover, and I'm glad you guys have it. Sounds like at least it served. Yeah, I'm all caught up here. Alright guys, that's going to do it for me. Hope everybody had a good time and learned something, and we'll try and get this edited. Hopefully comes across clear. And while it wasn't the perfect presentation, I'm very sorry it wasn't done by Chad. I wish he'd have been able to do it, but it is what it is, and hopefully it conveyed the same message, even though it's coming from me. Yeah, for all the members, I'll see you guys in the room tomorrow. Yeah, I'll try and get this recorded or put up here soon, Vlad. I'll work on that tomorrow. Give me 2 days or so to get it posted. It takes a while to go through and edit all the stuff out. So, well, not edit it out, but generally, if I'm private messaging anybody else, I keep those messages private, so I black that out. It just takes. I have to rewatch the entire thing. All right, guys, it's been real. Have a great night. If you need to shoot us an email, if you have questions, member or not, daytradingforexlive@gmail.com. Shoot us an email, and we'll be happy to get back with you. Krim, look in your email box. I will email you right now as soon as I get off the chat here. So, Jim, have a good one, buddy. All right, guys. I'll see you all later. Hopefully, see you guys in the room tomorrow.